2 bloody days in a row. What does that mean? That means great things for put sellers. My name's Isaiah, and in this video, I'm going to talk about what we made today and why down days are actually wonderful times for when you're selling options. So, first thing, we collected $521 today selling put options. Let's go over here, look at our history, all types. Let's go options. Boom. So, every play I made today, I sent out to the group I'm working with on Fiverr. So if you're somebody that's interested in learning how to sell options, it's an educational course. Obviously, no financial advice. I'm admitting my trades, what I'm doing, why I'm making them, as well as providing a little bit of guidance and psychology terms of making trades, because a lot of people go into making trades and they have to stare at their charts and they have to stare at the stock all day. Nope, we like volatility when we sell options. Volatility is your friend. The stock goes up, it goes down. Your premium gets better and better. So nonetheless, let's look at the 24th, full transparency. We collected 35, 42, 74, 140, 102, 50, 55, 58. You can add all that together and it gets you $521. This is what we collected today in premiums, selling options. Let's jump back over to our main tab here. So you see down $449 today. But we made $521 a day. The only reason we're down so much is we're doing that test to show people that that the highest yielding dividend payers like YMAX, YMAG, MSTY, it will not outpace selling options. And so I have a few of those in my portfolio just to use as examples. So MRNY, we have 461 shares. RDTE, we have 11 shares. YMAX, we have 518 shares. YMAG, we have 85 shares. ULTY, we have 300 shares. And one more, MSTY, we have 44 shares. So I have them all in my portfolio, and they are just dropping fast. So again, a call out to people that are investing their entire portfolios and then margining them as well. Please be cautious, okay? Do not chase yields. Try to diversify your portfolio with selling options. So let's scroll up again, and let's look at all the contracts I have open. I have about the same amount of money spread throughout all these contracts as I do through all those high-yielding dividend payers down there. And the income generated from them is not even close. It's about 10 times more selling options. And I'm able to be more diversified. I have so many different contracts, so many different stocks. I'm not contingent on one to make my gain. So I'm going to jump over to my Excel file so you can see a little bit easier to read what we did today. So hang on one. Okay, a little bit easier to read here. We did 2 contracts with FCEL. We collected 55 and 58 for both of those. We did Wolf. We collected 50 there. Iron, which is Iris Energy, that's one of my all-time favorites. We collected 102 there with 2 contracts. APLD, another one of my favorites, 140 on 2 contracts. CleanSpeak, CLSK, I jump in and out of this. Whenever it's down around this price, I like selling options, and then it runs back up, and I leave it alone. But it came back down. And finally, one more Iris Energy contract to collect a total of $521 today. As we know, our goal is always to collect 1% of the account's highest hit. So the highest we've hit for a full number is $54,000. So that means we have to make $540, which we're already at $521 for the week. Those dividend payers that come out weekly, that'll put us well above $540. So we might not sell any more options this week. We'll see. If we get another down day tomorrow, that's great. We'll go shopping some more. If it's an up day or the stocks are recovering, we'll probably just step away and not look at our portfolio today. That is the advantage of option trading. You make your trade, you step away. You don't stare at charts. You don't watch the stock go up and down. You do that when you're buying options, not when you're selling. So don't worry about what way it's moving. Step away. There are always going to be down days in the market. There are always going to be up days. So just step away, enjoy your freedom, do something else with your time, invest it in other ways. We're going to jump back into the portfolio, and I have one more message. The last thing I want to touch on today is the real basic entry level to selling options, because I've had a couple people reach out and they're a little unsure of how to open or close the position. So we're going to walk through it together, and it is after hours. You can see it's 7:54 p.m. That's Eastern Standard Time. The market has been closed for a few hours, so I can't open any new contracts. But let's go to options, trade options. And here, don't worry about the builder. We're not trying to build out any spreads or anything like that. Let's focus on our expiration dates. I always like about 4 weeks out. I feel like that is the optimal premium to collect. And for this example, I'm going to do an in the money put for selling options, which you don't usually do that much. Usually you're below the price. But let's do the $7 strike. So we have sell, you have buy, you have sell, you have call, you have put. When you sell a put, you're agreeing to buy the stock for a predetermined price at that expiration date. So for example, March 21st, a $7 put. I could get anywhere from $76 the whole way up to $100 per contract. The bid is going to get you filled right away. The ask is the range in which you're hoping to get. Again, you're not going to get filled at that 100. That's pretty lucky. But I always go closer to the bid. So let's go to our next screen here. Let's sell. And we could change. We want to do 2 contracts. And let's do $80. Always use a 0.80 right there. So then it says your estimated credit is $159.92. It takes out the 8-cent contract options fee. So now let's look down here where we have max loss. I think that's what intimidates people the most. They see that and they're like, whoa, the most we could get is $160 and the max loss is $12.40. So when you sell options, you're agreeing to buy a stock for a predetermined price by a predetermined expiration date. Because of that, you get to collect a premium or a credit. In this case, for 2 contracts, we would collect $160. That's the most we could get. It doesn't get any higher than that. And that's great. I like that. Knowing what you're going to make, and then you move on. Now let's move over to the max loss, $12.40. This is if this company, FCEL, would go to $0. The company would go to 0, get delisted, and it closes down. That's the only way your max loss is that high. And it's not 100 times 7, which would be 700 times 2, $1,400. It takes the difference between the total cost, which would be that $1,400, and it subtracts that $160. And that leaves you with your max profit or your max loss there. So again, do not be intimidated by that max loss. That is if the company would go to 0. And I don't believe that's going to happen. And if by expiration the stock is $7.01, it expires worthless and you've collected that whole credit and you're not assigned the shares. If it is $6.99 or below at time of expiration, you are assigned. You still keep your credit, but you are assigned those shares. Then when you have it, you can do the wheel strategy, which means you're going to sell a call. And I'll show an example of that later this week when I'm going to roll a position because it's the same concept of selling a call. But I hope you like this video. And if you want a little bit more learning on options and you want to, kind of chat with me, always chat through Fiverr. And, I get my cell phone number out. We can talk on the phone and give you a better feeling for stock trading and options. And it's an educational journey. And it's $75 a month, and I'll leave the link below. And I'd love to get started. So Reach out anytime and let's grow together.